International business refers to the trade of goods, services, technology, capital, and/or knowledge across national borders and at a global or transnational scale. It involves cross-border transactions of goods and services between two or more countries. Now let's spend a minute at the international business outlook of Philippines versus Indonesia. Here are some essential information you should know about the Philippines and Indonesia. The Philippines is located in Southeast Asia, on the eastern rim of the Asiatic Mediterranean. While Indonesia is located off the coast of mainland Southeast Asia, between the Indian and Pacific Oceans, Indonesia's land archipelago is vast. Let's take a look at the economy and markets of Philippines and Indonesia. The GDP and GDP per capita of Indonesia is much larger than the Philippines, but Philippines' real GDP growth is higher than the Indonesia. However, the inflation rate in the Philippines is twice than the Indonesia, so prices of goods and commodities in Philippines is costly than in Indonesia. Let's talk about labor. Indonesia has a lot of workforce, at the same time unemployed individuals, since Indonesia is much bigger and populated than the Philippines. But the unemployment rate of Philippines is bigger than in Indonesia. However, this year, Philippines ranks 84th while Indonesia is in 87th place. Let's compare the tax rates in Philippines and in Indonesia. Just take a look at the personal income tax rate between Philippines and Indonesia. Also, as we have noticed, Indonesia's corporate income tax rate and VAT rate is low compared to the Philippines. Now, let's study the investment and trade in Philippines and in Indonesia. Based on 10 indicators, we had concluded that it is easier to do business in Indonesia than in Philippines according to its 2020 ranking. Philippines exported electrical machinery, equipment the most, which has 51% of its total exports, while it is mineral fuels including oil in Indonesia, which has 19.8% of its total exports. Here are the top 10 export partners of Philippines and Indonesia. United States of America is the leading partner of Philippines, while in Indonesia it is mainland China. And here are the major export companies of Philippines and Indonesia. It can be seen that Indonesia had much bigger value of exports than the Philippines. As we had remembered earlier, the top exports of Philippines and Indonesia is electrical machinery, equipment, and mineral fuels including oil, respectively. It is also their top imports. We can see that mainland China is the #1 supplier of both countries. Philippines got 22.7% of the global total, while Indonesia got 28.7%. It could be concluded here that Philippines imported a lot based on its trade balance, which it got a negative value. Here are the investment risks of Philippines and Indonesia. In Philippines, #1 is natural catastrophes. The Philippines is prone to natural disasters such as earthquakes, volcanic eruptions, and typhoons. Second is failure of national governance. This risk captures the inability to efficiently govern a nation, which is caused by or results in factors such as weak rule of law, corruption, illicit trade, organized crime, impunity, and political deadlock. Third is geopolitical risks. The Philippines faces a number of geopolitical risks, including weak internal security, political corruption, and potential trouble in the South China Sea. Next is energy price shocks. As Philippines try to forcefully recover from the economic wounds of COVID-19, they are faced with another economic battle in the hike of petroleum prices. And lastly is failure of urban planning. Inadequately planned and managed cities also create new risks which threaten to erode current development gains. While in Indonesia, demonstrations take place every day. Protests focus on a range of political, economic issues and social issues. Second is corruption. Corruption in Indonesia has not improved impressively on the annual Corruption Perception Index. Third, government and bureaucracy. Indonesian government and bureaucracy systems are still complicated. It is very likely for investors to face some hurdles and obstacles in doing business and invest in Indonesia. Fourth is a lack of quality and quantity of infrastructure. A lack of quality and quantity of infrastructure in Indonesia could hinder economic growth. And lastly, natural disasters. Natural disasters in Indonesia such as earthquakes, tsunamis, volcanic eruptions, and floods cause casualties and damage to infrastructure. On the brighter side, here are some reasons why you should invest in Philippines or in Indonesia. In Philippines, the Filipino workforce is one of the most compelling advantages the Philippines has over any other Asian country. English is taught in all schools, making the Philippines the world's third largest English-speaking country. Second, strategic business location. Sited at the crossroads of the Eastern and Western business. It is a critical entry point to over 500 million people in the ASEAN market and a gateway of international shipping and air lanes suited for European and American businesses. Third, abundant resources. An archipelago like the Philippines offers diverse natural resources, from land to marine to mineral resources. Fourth, low cost of doing business. Wages are typically less than a fifth of that in the US. Foreign companies are now outsourcing programming and business processes to the Philippines. Next is liberalized and business-friendly economy. Multinationals looking for regional headquarters are entitled to tax exemptions and tax and duty-free importation of specific equipment and materials. And lastly, unlimited business opportunities. The Philippines has enhanced and primed up various areas for investors and offers a dynamic consumer market accustomed to an array of product choices created by a competitive domestic economy. While in Indonesia, first is trade agreements. The government of Indonesia always puts effort to boost the country's economic growth and make it easier for foreign investors to pour investments through signing trade agreements. Second is ease of doing business. When it comes to company registration in Indonesia, the process has been significantly improved. Third, investment incentives for foreign investors. The CIT rate will be reduced to 20% in 2022. Other than the CIT reduction, various tax incentives have been granted to encourage even more foreign investments. Fourth, huge population, growing middle class and competitive labor costs. Huge population means strong purchasing power, and strong purchasing power implies that any kinds of businesses can thrive and generate substantial profits. More than 40% are the working-age population, making Indonesia a big pool of laborers. Also, the country offers competitive labor costs compared to other countries like China and Singapore. Next, permitted land ownership by foreign investors. To be able to buy land in the country, foreign investors can choose whether to establish a foreign-owned company or a locally owned company. And lastly, biggest economy in Southeast Asia. It has the biggest total GDP and a rapidly growing GDP per capita that is ahead of most of the frontier and emerging markets in the region. That would be all. Thank you for watching.